Welcome, everyone, and thank you so much for listening in. Today, we're going to talk about how markets can seemingly go up forever and ever and ever. And I know that I get asked this question all the time is how is this even possible? Aren't we at the top? Isn't this a bubble? And all of that. So that's what we're going to talk about today. But before we do, as a reminder, this is an educational show and should not be construed as personal financial advice. Full disclosure information is available at OTOTnow.com. Now let's get started. So when you think of the Dow, we'll just talk about the Dow Jones Industrial Average, and how far it's come. So I'm going to throw some numbers at you, and I know you're probably in your car or jogging, but just kind of follow along. That in 1917, so think, World War I time frame ish, the Dow Jones was at 100. And then 10 years later, in 1927, the Dow Jones was at 200. 10 years later, Dow Jones still at 200 because we had the Great Depression there. So we did have a lost decade, which all of the records we just set both up and down were, as far as the pace of the drop and then the rise, was all replacing the Great Depression numbers on how far and how fast the moves made. So we actually, for those who were listening back in March before the podcast, but listening to me through other venues, is we've been making we're making history. So one thing, just like being in the military, when you're out doing something, is don't forget that you are in the middle of a historic period for our country, and kind of look around and take some notes so you can remember it when you tell the stories later on. But so between 1927 and 37, the Dow Jones basically even stayed at 200. 1947, it was still just a little over 200. 1957, it's up at 500. So that's where you start to really see it take off. And of course, you can imagine now this is the post-World War II period where the economy is booming. 10 years later in 67, it almost doubled again, up to 800. 77, it was hanging out around 850. In 87, it more than doubled, from 77 to 87 up to 2000 on the Dow. 10 years later, the Dow is at 6,000 in 1997, which was a triple. And then from 1997 to 2007, another double, up to Dow 12,000. Then, of course, in 2007 through 2009, we had the global financial recession, which took a big hit, but also climbed steadily out of that. So from 2007, where the Dow was at 12,000, to 2017, 10 years later, the Dow's up at 19,000. And now we are 3 years later, and the Dow's at 25,000 plus. So how is that possible? We can get not only exponential growth, but then we have to ask ourselves the question, can this go on forever? Folks that deal in the market a lot say yes. There are some folks out there that will say no, that we are in a bubble, and we could be in a short-term bubble, absolutely no doubt. I'm not trying to make an epic market call. There are going to be bubbles along the way, but as you take a look at the overall investing process, you have to kind of think of what you're actually doing. So the Dow, as well as the S&P and the NASDAQ, of course, the NASDAQ made new highs again today, are comprised of the underlying businesses. And investing in businesses is not a zero-sum activity. So a lot of folks, when they think going to the market, I want to buy low and sell high. Well, that's already a trading mindset. And if you buy low and sell high, then you make a little bit of money. Well, somebody out there in the trading world, somebody has to lose that money. So there has to be a winner and a loser. If you are more of an investor, where you're going out and you are buying and holding and not interested in selling, even if it goes up, because you want to hold and get that multi-year, multi-decade growth, which can be exponential in the best of breed companies out there. If you're holding for that, then you're not interested in selling, and that's not a zero-sum activity, because all these businesses can grow. So when you look at businesses that make it public, they're vetted very carefully before they can even get to the public market. In the morning brief this morning, I talked about the IPO process and how companies can go from private to publicly held. Well, they have to meet several criteria, then get sponsored by an investment bank. And then that investment bank has to go out and market the security, the stock, across several people to make sure there's the demand out there, that people are actually going to buy this. Then they get back with leadership and they go through this whole process, which is very carefully vetted. And that's why in some years you see very few IPOs. But to get through that hurdle to get to be public, most of the time, you have a solid business, and solid businesses grow over time. They have good leadership, good products, good services, and they're providing, they're meeting the needs of the population, and they're able to make money along the way. So when almost all of them are doing that, then the market grows because it's the valuation of all those businesses over time. The weak companies out there do get killed off, or even if they're not weak, sometimes their business model just gets invalidated. We're still in the throes of COVID-19, and when you think of businesses that might no longer be with us, well, restaurants, airlines, cruise lines, all, Disney, all those places can survive over the short term. And of course, we can bail them out, with the different things that the government's doing in the short term. But if we're still doing this a year from now, we're going to lose a lot of these companies. And not because they were poorly run, it's just it happened, right? Blockbuster was amazing. I remember going to Blockbuster, and that was like date night, right? You would go out to Blockbuster, you pick a movie. If you're doing good, if you got to pick up two, it's like, all right. Yeah, well, you don't have to do any of that nonsense anymore. And not because Blockbuster was a bad company, it just got invalidated by Netflix, and you just don't need that anymore. So that's what happens with companies that are either bad from the get-go, or in business models are invalidated, just go away, get either consumed or liquidated, meaning their assets sold off, and other things are moving in. When you look at the malls right now, do not feel bad for the malls, because we may not be going to the malls to shop, but guess what? That is premium real estate. And when Amazon bought Whole Foods, they didn't really buy Whole Foods because they wanted to sell, overpriced coffee and goods that Whole Foods tends to sell. They bought it because they needed the real estate, and Whole Foods had amazing properties that now they could turn the back part of the store into a distribution center. Sure, they kept the front, but they really wanted the space. Well, think of all this space that's going up. So when you think of, capitalism and the American economy, some great things are happening behind the scenes. So when businesses go under, all those people don't just sit at home and collect unemployment. And today, today's Thursday, so we get the unemployment numbers every week on Thursday, and you get the, 1.3 million people filed for unemployment in this week. That's true. Those are freshly laid off people, but don't forget that people and assets don't just sit idle for the most part in the United States. They pivot and they reinvent themselves, and they're off somewhere else. They either look for a new job, maybe it's a career change, maybe the mall store now becomes a distribution center for Amazon, or a million, any other company out there that just needs floor space. So that's how markets just can continue to go up over and over and over, because there's that constant reinvention, constant, getting the, people don't like targeted ads. You hear people cry about targeting ads, but think what targeting ads, and when I'm talking about the pop-ups that are on your screen, or when you have a conversation with your friend about a new movie that's coming out, and then 15 seconds later, the trailer shows up as an ad, trailer for the movie, shows up in an ad, in your Facebook. It's like, how do it know, right? Well, it does. And you've given it access to know everything about you, and it's going to target ads for you. And guess what? When I was buying a truck, that's helpful, right? You may be irritated by it, but it's very helpful because I'm seeing every truck ad out there, and I'm able to, as a consumer, kind of sift through stuff because they know and get those targeted ads right to me, right to my face, literally like 6 inches from my face on my phone. So I can sort through all that stuff and make my decision as a consumer. And that helps everybody. It really does. So don't be annoyed by that. That's making things very efficient. So that's how things can continue to grow up over time. Now, as money makes money, which being in the money business, if you don't understand that concept, then you really need to go back and start at the beginning of the podcast of, what is investing and what are we trying to do. But your money makes money, so you don't have to. You could literally be sick in bed all day and your money does the same thing that it always does. It's either invested in real estate, stock, bonds, gold, Bitcoin. I don't care what your investment is. Your money is out there working for you. Now, so it goes down sometimes. I'm not going to say it goes up every day, but you've allocated it to something that you think is going to increase in value over time. So let it do its thing. Well, with money being created like this, when you have situations like the COVID crash in the market, which started, you could say early March in a meaningful way. It started in March on the way down and bottomed out on March 23rd. 35% in less than a month. That's significant. But that money is like water. It has to go somewhere. So when money goes sloshes, that's why I like to use that analogy, out of the market, it's not just going to sit in the bank where, if you have money sitting in the bank and inflation averages 2%, if you have either $5 or 50 million sitting in the bank, you're losing purchasing power because it's doing nothing for you. And that. And you got to keep some there for safety, whatever your personal tolerance is for your emergency fund or your sleep well at night number, I call it. But when you go like, oh crud, I know I moved a bunch of money out of the market, it's going to sit on the sidelines, but it won't stay there forever. And that's why when you saw the market reverse on March 23rd, that's why we had the V-shaped recovery. At least that's where we are now. We don't know how the story ever ends, but for all intents and purposes, that was a V-shaped recovery. It was very quick. It set records for how fast it recovered. That's because of money flow. So money is very powerful, and when it goes to the sidelines, it's coming back somewhere, whether it goes into Bitcoin or pet rocks, or I don't know whatever the latest thing is that comes out, money will flow into it. So that's the money flow issue. And when you think of what businesses do, is businesses kind of create value. They either provide a product or service for the population, and if that product or service isn't needed, the business dies off. If people didn't go to seminars about how to sell real estate and flip properties, then there would not be seminars that do that, right? Those things exist because you go and you sign up for the $5,000 package that's going to change your life. And then if you execute it, yeah, you can do that. Absolutely. I'm not saying they're scams. I'm just saying that it's a human nature that if you are inclined to go to a seminar to get motivated, that when you leave the seminar, you are not motivated, right? That's kind of the theory there. But yeah, if people didn't go to these things, then they couldn't exist, right? So, or, food delivery has obviously exploded to where everybody's doing it now. And even Uber buying Postmates, it's like, this is insane. So now it's kind of the new expectation because there was a need and the market will fill the void. So that's value creation, and the ability for America to create value, I think, is unsurpassed by anybody in the world. You can argue with me and I will acknowledge your opinion, but that is what makes us great, is the ability for Americans to figure something out. Now, where does that value creation come from? Now I'm 50, so when I was in my teens, it was everybody must go to college, and college will teach you everything you need to know. And then at that point, you can be competitive to get a high-paying job out in an existing enterprise. And at that point, what you're really doing is adding value to an existing enterprise. And we did that for a long, long time. And that was the model, and you shoehorned everybody into the model, and that's how it was. Then we had some people that were sitting in the model at college and say, you know what, I know everything I need to know to go do what I want to do. And those are now billionaires. Not everybody that walks out of college class and says, I got it, is a billionaire. But certainly there are many cases that there are folks that quit early because it's like, I don't need this. This is teaching me to go work for somebody else, but I'm not going to go work for somebody else. I'm going to go work for myself because then I have an idea for a product or service and a vision, and I'm going to go make it happen. So to reiterate, going to college, you step out the door. Most people apply for a job in an existing enterprise. That's adding value to society through your schooling, learning a skill or a academic piece of work and skills on the academic side too, to go out and add value to something that already exists. Now, when you talk about entrepreneurship, that is value creation. And that's when I tell you why America is so great, is because almost everybody, at least now, has that entrepreneurial spirit, whether they had it as a kid or they figured it out later or a second career. You know, I talk to folks that are entering retirement and they're just thrilled that they finally get to go do whatever it is they want to do. And if they've done the saving and investing correctly, that they are financially independent and they don't have to do it for money, right? They can, if you want to if you want to carve wooden bears with your chainsaw and sell them, well, if you're already financially independent, you don't even, you know, you're doing it for fun. You're just paying for your hobby now, right? You want to break even. You're not looking to make your millions that way. But there are many people that are. And there are many people that are like, you know what? I already have it, you know, the spirit in high school, and they're already doing things before they even have the opportunity to go to college, and they're learning about business. And entrepreneurship is for the true entrepreneurs, which I can't claim. I didn't start my own business till I was 43. But for the folks that are doing it in their teens, guess what? They're failing a lot, and it's failing their way right to the top, because the faster they can fail, the more they learn. So you try to sell lemonade on the corner. Nope, nobody showed up. Okay, what can we do better? And you sell t-shirts online. It's like, okay, made a little bit of money. Nope, don't worry. I'm going to be an ambassador on TikTok for this clothing thing. Okay, my friends aren't buying it. They're not using my referral code, whatever. Okay, done. I'm done with that. But the more they try and the more they fail, the more hardened they are. And you only have to succeed once. So imagine that. You go to college, you go to work for an employer, you may be bopping around, but largely you stay in the corporate world till you're 60 and you retire off your 401k. Folks that are living out and creating value as entrepreneurship, literally creating something from scratch, adding value where there was none earlier, that is propping up, you know, and those companies grow up and become public companies, and that's what keeps the market going up. But literally those tools are so important. And I know I live in Austin, right by University of UT, and they have a huge entrepreneur program down there where they have folks come in and talk. And of course we have South by Southwest, which is, I consider, a hotbed of entrepreneurship, amongst other things, is bringing we have the Capital Factory headquartered here, if you haven't heard of that. I mean, incubators, if you will, like Silicon Valley, without having to live in California. No offense to the Californians listening, but it's expensive out there and it's not here. Bringing that sort of thing of, we're going to create something from scratch. You've got a smartphone on your camera, or you've got a smartphone, excuse me, that has a camera and access to your website, and you can build it all with tools that you can carry around in your pocket. It's like, come on, that's amazing. So if you want to be inspired, go to YouTube and Google the words magic moment video. It's a Dell video. It was actually I don't want to say it was a Super Bowl commercial, but it was an ad at some point in time, and it was released during something major. And it's got the magic moment kind of thing, and it talks about, you know, 1984, whatever year it was. Of course, I'm from Round Rock, and that's where Dell is headquartered. About how, yeah, there's Michael Dell in his garage and how it all started. So the inspiration that Americans can now, and it's being taught more in schools, but it's, I think, mostly taught by peer groups, and kids, the more connected they are online, I love it because they're getting entrepreneurial ideas. Now, are they going to fail? Yeah, in mass, right? But you don't have to, you can fail 100 times and you just have to make it once. So that's kind of my point. That's how everything's growing, is that value creation that we have as Americans. So thanks for listening in. Went a little longer than I wanted to there, but the market, you can, in 10 years from now, you can count on it being higher, and 20 years count on it being, I mean, it's going to continue to move up as long as businesses can continue to grow and expand and become more efficient and provide more to you, the consumer, as well as we kill off the invalidated or the bad companies that are out there. So it's a very efficient model that you should be confident when you put your capital to work. So that's all we have for today's episode. Please reach out to me through ototnow.com with any questions or comments. Thanks again for listening, and here's to you fighting the good fight every day to be on time, on target with your goals. Bye.